Переходим ко второй пленарной сессии регулирования.
Dear participants of the Congress, we are now moving on to our second session. And in today's session, we've got our dear participants.
And they represent regulators, the first Vice Minister of Agency for Financial Market Development, Oleg Smolyakov, Mr. Bubeyev, also representatives of the market, Jusan Bank, Aibek Kaiyp, Chair of Board of Banky, CenterCredit, Galim Khussainov, and Shalkar Zhusupov from KMF. All of our speakers have an extensive experience working in the financial market, and they have their own point of view. Regulators have their perspectives on how to do business, and the business has their viewpoints on how to regulate. Now, let me go back to the question, why do we have special regulation or even supervision in the financial market? This is a common business, and the answer seems to be obvious. It is to ensure financial stability on the whole, in general, and protecting investors and consumers of financial services. Each party tries to stick to international standards in this respect, both regulation and best practices in supervision. However, there is no ideal structure for state regulating bodies that exists, and everybody uses their own way. Kazakhstan, in its 30-year history of independence, has gained its own experience. Let's go back to history. In the early 90s, when we had to develop the financial sector, when we had to develop the securities market, private saving funds, the focus was on individual regulating bodies. Later, all regulating bodies were concentrated in the national bank. However, there was an intent to single out the financial regulator, while the national bank had to keep the classical function of the central bank. And in this period, we had a new project, regional financial center Almaty. For its development, they created a separate regulator. However, market regulation functions were not given to it. They were kept by the independent agency. And this regulation configuration kept for 8 years. And at the end of these 8 years, the functions were returned to National Bank, and regional financial center Almaty was eliminated. And the next format existed for another 8 years. Unified regulator in the person of National Bank. However, later on we had two entities, two regulators, National Bank and Financial Market Regulation Agency. And starting 2015, we had a new project, a large-scale project, Astana International Financial Center, with its regulator, with its exchange, etc. However, there are separate regulatory functions with such entities as Competition Protection Agency, Financial Monitoring Agency, Ministry of Digital Development, and the Council for Financial Stability has its own functions as well. The agency also has another function, that of development. So it looked like we could live well for another 8 years, but that's a joke. But now, after this story, I have a question to you, Oleg Alexandrovich, as a representative of our main regulator. There is no unified structure, no unified international rules. However, you are familiar with this regulating structure of UK, and and we took them as an example is in early 90s. In UK in 2013 made a significant transformation of regulation bodies as a response to crisis of 08 and 09 and the vulnerabilities detected. So my question is, what do you think that the structure of the regulating bodies, their rights, and does it determine the financial market? Thank you. Thank you for the question. I congratulate everybody on the coming holiday. The UK system is not homogeneous as well. The system has been through stages. Sometimes the regulating bodies were different for financial market and for the monetary policy, which led to certain problems. As you have said, there is no commonly recognized practice or an ideal solution. If you look at analytics and you look at figures for various concepts of financial regulation, it's difficult to find the best system. Most research shows that most regulation of the banking sector should be carried out by the National Bank. However, on the other hand, statistics confirms that when we have one regulator, single regulator that provides supervision and provides single standards for all segments of the financial market, so one regulator for insurance, for financial markets, these structures are separated from the monetary regulator. The choice is towards effectiveness and synergy. So in my opinion, when we talk about the consumer rights protection, the latter part of the question, the structure that unifies regulation of various sectors under one regulator is even more effective. Why? Because we know that for several decades they have been discussing why are we regulating the entities or the activities. When we say that we need to gradually focus on the activity, we come to the fact that these types of activities do not always associate with a separate entity, bank, insurance company, or a security issuer. So the system is evolving. There are different approaches depending on the market concentration and segmentation and lessons of the past. But the three principles, the main three principles, I'm not a proponent for becoming an advocate for a certain system. I just support basic principles. If we have basic principles, any system will work. So what principles are important? First is clear-cut terms of reference. There should be no gray zones. If there is gray zone, there is either void or conflict of interest. The second one is related to the information. There is another problem, lack of information or information asymmetry, when there is no sufficient information for quality decisions. If we have certain overlaps of competences, we need to understand that what we have. So we need to. And the third question is interaction. These principles have been determined, they're being observed. We have a stability package which addresses not only stability but also banking development. Not only banking development but other sectors as well. If we take the financial regulator in the personal, we use the same financial basis for financial indicators of financial organizations. This issue is already resolved. If we look at the agency's responsibilities, it is also clear-cut standards, protection of rights, standards of regulating, supervision, and standards to avoid unfair competition. The system is evolving, and we had a discussion on ecosystem today in the morning. This is another example. There is no globally recognized practice as well. Non-banking principles based on platforms or bank-centric systems. But bank-centric systems, I think, is an example that is more characteristic of our country. But here we cannot predict that, provide for a single regulator that will cover all. We need to have these principles. First of all, clear-cut. We need to know who regulates what. Second, we need to interact, coordinate, and third one is we need information. So I support the point that when we talk about such new areas, new technological areas, we face certain risks that relate to the lack of regulation. But when we talk about regulation, we need to talk about client-orientedness. We need clear-cut rules with regard to regulating.
Thank you, Mr. Oleg. You're absolutely right. At our first plenary session, Mr. Lamtadze made the suggestion that we need to not only talk about the platform of open data, but actually get to implementing it. And we do have new capabilities here for the client, for competitiveness, but there are also challenges in terms of protecting the rights of consumers, because then we would be letting in unregulated systems. And the issue is that the structure of our regulatory bodies does not create a discreteness, in that somebody needs to understand that these risks are there and that nobody would try to that this issue should be seen and should be nipped in the bud timely. Now let's get back to more relevant issues. Over the past few years, specifically in 2018, if you remember, there were some new legislative changes which expanded the authority of the financial regulator, and they were adopted by our market participants with some concerns. So the ability of using motivated judgment by the regulator. So could you say that those fears were in vain, and that already the procedure of using this judgment has become custom for the market and for the regulator, and that overall the systemic shift to risk-oriented supervision has been implemented? And if that's the case, have the market participants felt that? I do remember just a couple of years ago, we were discussing this issue, and I remember your comments in terms of how important it is to keep up the balance. And I should say that if I were to say that we've already formulated fully the system of this motivated judgment, which does not need any more changes and is cemented, that would be wrong to say. And you know that a system of motivated judgment we have in 4 areas: reputation, business reputation, access to market, and sufficiency of provisions. So if you look at international best practices, we probably chose only the key areas that actually do need that focus in the accumulation of expertise, because the practice of other countries, it provides for fiduciary responsibility and other things. So not only from the standpoint of the perimeter, but also accumulation of knowledge. This is an issue of step-by-step progress and education together with the market and learning. Because I remember when we were building the motivated judgment system, we specially stipulated for a procedure of discussion with the market. And this procedure in some cases is even harsher than if you compare it with the experience of the Bank of England and other financial regulators. We have a preliminary period of preparing that judgment. We have a period when this issue can be discussed, can be disputed by the financial organization, can be elevated to a higher level, and it comes into force. If you go through all the procedures, gradually it's going to come into force with a delay, so not less than a month. So that was a balance, kind of a compromise that we reached, which we were then at the first stage. And of course, to have absolute discreteness of authority, that wasn't in the interests of the regulator. And this experience is being accumulated over 2020 and 2021. There were several cases of using motivated judgment in compliance with all the procedures. Also, in terms of appeals, possible appeals, I'd say mostly those were cases that had to do with identifying persons that had special affiliations to banks and internal risk assessment. I'd say in terms of the banks, the risks are more for an irrational solution, but that's already in the legislation. So all the decisions have to be well-founded and grounded. So this is what we're trying to preach, and I think there's a big prospect for using motivated judgment, because we have the QR, and if you look at the relation process, this is a system which is aimed at the assessment of internal processes and internal documentation and the compliance of banks' actual actions with these procedures. And in terms of the AQR plan, its main result were processes and policies, the practice of implementing the standards. So, and also the stress test. Now, stress testing, as you know, we have a rule of using, in the rules of using motivated judgment, one of the areas that is needed is that banks need to have quality procedures of doing stress tests, and we have requirements for asset quality review and assessment of the sufficiency of capital. And so this is all the area of motivated judgment, which we will be building up gradually in the coming 2 years. Thank you. Mr. Mukhtar Saparovich, now you also represent the regulator in the most advanced one. You're based on the most advanced methods and approaches. Now, in your work, are there any differences in terms of advisory approaches, methods, and instruments compared to the local regulator, the national regulator? And in your practice, have you had cases of any incompliance with norms or ill behavior of participants? And have you, with your methods, been successful in regulating such conflict? And overall, from your standpoint, which competencies and expertise and technical capabilities should the regulator have to build up an effective risk-based supervision? Thank you very much, Ms. Bakhmutova. I'd like to congratulate all the colleagues on the upcoming National Currency Day and the 30th anniversary of the independence of Kazakhstan. Important holiday for all of us. I felt a bit of sarcasm that we're the best regulator. Now, I will probably express my solidarity and say that I really support my colleagues. We don't believe ourselves to be the very best, and not many people want to be friends with regulators, so we have to be friends with each other. So to give a good answer to your question, we need to stem from the market itself that we're regulating, and the difference in the structure, in this state of development, and the scale of that market. That's what dictates to the regulator the approaches that they use. And so just a couple of words about the AIFC. And in the beginning you said that AIFC is an exchange regulator. AIFC is much more. It's a full-fledged ecosystem starting from the court, in which you have law enforcement, and it goes up until staff training, which are involved in the financial market. So AIFC is more than 1,000 participants as of today. And the majority of them are not financial. The majority of them are IT companies, holdings, structures for certain types of business. And only 200 are financial or near financial. We regulate all the sectors of a financial market, the bank, the market, the insurance, and the securities, capital trusts, and additional services are audit, accounting, consulting, of credit rating. And so out of this whole structure, and based on the fact that the objective of AIFC doesn't include retail lending or retail as such, it's more of professional and corporate investors and customers. And out of this market structure, the regulator is structured in this way, and the principles of the regulator's work can be somehow different sometimes than what we have on other markets like in Almaty. And if we talk about regulation, how much we're different from our colleagues, I'd like to first say that our basic principles are all the same. We use the Basel principles of supervision, the Association of Insurance Supervision. And so we get all the principles from these common documents, and we use them in our work. The other issue is how we implement that. And there are certain differences here. The main difference probably from how our colleagues work is that we use the principles and not the rules. The main principles are written down. There's not a lot of them. They're kind of high level. Like, for instance, you have to be fair to the customer. You have to have sufficient resources financially and technologically and human resources. You need to manage conflict of interest. One of the principles is that you need to cooperate with a regulator. And these high-level principles, this is what governs our organization. It's of course that for these principles we write additional policies as far as how we understand these should be put into place, but overall we try to make sure that the principle is implemented. And if you need to be fair to the customer, then that means the structure of the regulator will reflect how we implement that principle. More specifically, we have a prudential supervision department, and at that stage we don't divide it by sector, bank, or other. And we have a special department for behavior supervision, which keeps track of the companies being fair to their customers, to being careful about customers' assets. And these kind of approaches are kind of different. And the second mandate that the regulator AIFC has is pretty broad. We have authority on writing the rules that govern the work of the sector, and these rules are approved by the board of directors of AIFC, in which 8 out of 9 are independent board members. They're all foreigners with a great deal of experience, so we can't really change much in regulation, but we try to have a stable legal framework. We think that's very convenient for the sector and for the regulator when the legislation is stable. But we're responsible for everything in our financial sector, and that's why we have broad authority, and that gives us an opportunity to be flexible in certain environments. For instance, in relation to certain companies that fail to do something because they have their business is too small or it's too simple, and we can give them concessions directly to the company and to a whole sector, to a whole stratus, to a whole group, to make exceptions from the rules. We can modify our rules to temporarily see how that's going to work, and then either make that a law or get rid of that modification. Like, for instance, during the pandemic, we modified the rules on reporting, on liquidity, and that gives us an opportunity to test it out for a certain time without changing legislation, because you change legislation too much, I think that's a bad thing. And that flexibility is balanced by the amount of responsibility that we have. And the third, law enforcement, I think it makes sense to talk about that. The law enforcement is, I would say, kind of flexible. First of all, it's completely separate from supervision. We have a separate department for law enforcement, and they do investigation of more or less serious deviations or violations, and they have to make a decision on what to do, to either withdraw the license or do something in relation to a certain director or a penalty. We don't have fixed penalty amounts. That probably is what makes us different from the administrative penal code. Now, it also depends on how serious the violation was. Did the company acquire any profit as a result of that violation? So the penalty should take into account that whether they did or did not have income from that, and how cooperative the financial organization is during the investigation. The more cooperative they are, the more discount they're going to get. And, you know, we like when this financial sector cooperates with us. And it's right, because we just talked about communications before, and it's pretty important. Today, Mr. Yerbalat was mentioning that the act of currency regulation was signed. I can maybe in more detail talk about it to make it clear, because the gray zone is this bad principle that was just mentioned. For some time, organizations in the AIFC were working, and it wasn't clear whether they can provide services to Kazakhstani customers or not, whether they can do it in foreign currency or not, what can be done, what can't be done. And so this act of currency regulation gives more clarity to what can be done, what cannot be done. And we're focused on aiding the financial system of Kazakhstan in developing. And thus our focus within that act of currency regulation was in relation to investment banking, asset management, and insurance, as we believe these are the most promising sectors that we can complement and that we can help the development of Kazakhstan with in terms of services. So we had some concerns about that financial stability. Yes, we believe the banking sector, as a result of our discussion, we realized it was the most sensitive, and so limitations of what the bank can do to its customers and with its customers in Kazakhstan under the AIFC, there were the most limitations in the banking sector. Why? Because we don't want to be the reason for a threat to the financial stability of Kazakhstan. On the contrary, we cooperate. We want to help other regulators, and within this cooperation with other regulators, to support financial stability in Kazakhstan. And I'll probably finish by saying the last thing, that we have the biggest difference is in the English language. I have to do everything in English. Sorry for who that's inconvenient, but that's to make it easier for foreign players to come in. And we're seeing that foreign players are coming in. They are localizing their services here, which we believe that's good for the market. At the first session today, Mr. Lamtadze also said that competitiveness is good in Umit also, and competitiveness comes through the AIFC. Foreign participants come through the AIFC, so we try to support that, but at the same time to make sure it doesn't harm or pose a risk. In terms of law enforcement practice, I'm going to answer your comment quickly. We do already have experience in penalizing players. So there are companies that advertise something without having the license to do so, and we work with them. We had this one case when the company took their website down, they cooperated, and we agreed with them that they won't do that anymore. Another company started trying to confuse us, starting to provide arguments, and we had to take a more harsh approach and withdraw their registration and demand that they take down their website. So once again, cooperation is pretty important for us, and how we cooperate with the sector, we do make a lot of emphasis on that, and we try to listen to our colleagues who work within the sector, what their challenges are, what their barriers are, what their needs are, and how we can together mitigate the risks that arise. And we believe that that's the only way that you can do it for the future. So motivated judgment is not an issue of whether you need it or not. The issue is how to more effectively implement it, because the pandemic has shown that oversight is quite important. It's more important than even regulation at some point, because there are new risks arising and there are new threats arising, and the quick response always comes from supervision. So motivated supervision, I think that's de facto the standard. The question is how to implement it better. And I think it goes through cooperation with the sector, through explanations, through regarding the risks together, and the stress testing that the colleagues are doing is pretty important, because it allows to together look at the same risks and prioritize them with the regulator's side and the sector side. I think I'll finish at that, because I can talk about the AIFC for a long time.
Thank you very much, Mukhtar Saparovich. See how high our cooperation readiness is. We allowed you to talk about AIFC activity to our participants. Great, there are new opportunities for development, and I hope there will be no new arbitration created. The new agreement will create a more transparent environment for participants and clients. Now, I would like to... We have listened to the regulators. We understood what principles and instruments they're using. These are unified principles in general. Now, let's try to understand what barriers we have from the standpoint of the market participants. My question is to Aibek Trebekuli. Your group has had to face serious challenges when you acquired Cesna Bank and you had to clear assets. Today, Madina Yarosilovna mentioned that there is a special program, that legislation is being developed on the simplifying the clearance of stressed assets. In your practice, what barriers have you faced, and are the changes that are being discussed going to help resolve the barriers that you encountered when working with the assets of the bank that you acquired? Thank you very much for your question. Yes, indeed. Back in 2019, we acquired Cesna Bank, a large corporate bank. The assets consisted of a problem credit portfolio. The first barrier is our internal barrier. When you look at such a big portfolio of problem credits or problem loans, behind each loan there is a person, there is somebody's destiny. So we had to make the right decision to separate the whites from the grays. And I think we were able to manage that. We gave support to bona fide businessmen, and we resolved the majority of the questions on a systemic basis. And but the statistics speaks for itself. We resolved all problems within 2 years. Now we reduced MPO from 50 to 10%. We have entered the regulatory corridor. The statistics speaks for itself. We don't see any global barriers at legislative level, in terms of legislation on taking debts, but there are certain gaps that in the legislation that makes this work more challenging. But on the whole, the legislation is quite good. It reflects the interests of both borrowers and lenders. And these problems, these gaps is what we discuss most with the agency of financial regulation and other state bodies. Now that's it from me. Thank you. Thank you. Today, in the first plenary session, we have heard figures. We have heard figures that that evidence low permeation of loans to SME and agribusiness. Early this year, we had lots of discussion at high level with the participation of the Prime Minister to understand the reasons for such low loan levels and to understand the barriers that may exist. And so in connection with this, I have a question to Galim Khussainov. What regulatory limits, restrictions that would hold back the SMEs and agribusiness? Are there such restrictions, regulatory restrictions? And in your opinion, is there a balance between the need for financial stability, stimulating lending, and borrower rights protection? Thank you very much for your question. It's an interesting question. First of all, I would like to congratulate everyone on the coming holidays, the Independence Day and the Financiers Day on 15th November. Talking about question 1, for microbusiness, for SMEs, from the standpoint of regulatory requirements, we have ideal conditions. We have risk weighting for micro and small businesses is very low. The collateral policy is also quite acceptable. So there are no problems lending to small and medium-sized businesses. The main problem in SME lending is quality assessment, borrower quality assessment. This is the main problem for banks, and we need to address this problem first of all. And what we encounter here, the first factor is the fact that small business and micro business resembles retail a lot, but there is no, but banks' information access is very restricted, and automated decision making is, and the decision making is quite complicated, and it affects the speed of lending decisions. In retail, we have been given access to data about pension contributions, and this gave impetus to retail lending, and banks were able to assess risks in retail lending. But in SME, there are lots of barriers that do not allow this. First of all, we don't have access to the reports of micro businesses. We can see only their turnover with our bank, and in the manual mode, requesting information from tax authorities. This allows us this requires us too much time. So the only way out I see today is to provide banks the opportunity to receive access to tax services and tax turnover data. This will This will accelerate our lending and proactive scoring. I think the main barrier here is the tax secret, but there is also the bank secret. But here I don't see any problem. And second thing, the fact that SME provides all information in tax declarations, but it is all provided manually. And today, this is not an argument not for the banks not to be given data by tax authorities for making lending decisions. And the second problem is collateral assessment. Today, SMEs are lent on collaterals. We're just starting to develop non-collateralized lending of SMEs, but it is just in its embryonic stage. And in this connection, we have the problem with quality of assessment. The quality of assessment today in Kazakhstan is very low. I think only Big Four can provide unbiased assessments. Other companies cannot ensure reliable information on assessment. For property, for example, the gap or the difference is quite high, and to validate assessments, we need to access information on property. For example, property, private vehicles. If banks had access to real transaction, even through tax or Ministry of Justice, this would improve the quality of assessment and the quality of services and the opportunities for lending to SME. This is what concerns SMEs. In relation to the client's rights, on balance, there have been a lot of discussions. I think we need to separate two things. The first, any assistance to borrowers that are socially vulnerable must be provided only by the government. It is the function of the government to help the socially disadvantaged. And the problem here is to how to determine whether this borrower indeed has the do they have the need indeed. For example, sometimes borrowers have large properties like 200 square meter houses. When they become problematic, I don't think they are indeed in need of support. There are lots of such cases, and we need to understand the other side is the speed of collection and the inevitability of discharge of obligations. So we see that sometimes courts take the side of the borrowers, and as Umid Bulakhanovna has said, and I am very supportive of what she said, the borrowers should not be able to avoid their obligations, no matter what. And only in this case can we build the right relations between banks and borrowers. And the second thing that affects is the speed of collection. For individuals, sometimes it is 5 or even 10 years of collection. So if we take the average 5 years, the bank loses about 70% of the market cost. And this leads to the fact that such loans will give big losses to banks, and as a rule, banks include these in cost of risk, and this affects the end consumer in the interest rate. And we see here that because of bad borrowers, good borrowers suffer because their services are more costly, and we need to minimize the speed of collection. However, we need to find balance for the aid, and we need to make sure that support is given to people that truly need them, and we need to set the right criteria for support. And when these criteria are clear to everybody, and when discharge of obligations is inevitable, this will improve situation. And third thing, we need to understand that bank assets do not belong to the owners. They belong to our creditors and debtors. And we need to protect these assets. And we are more protective of the interests of our debtors, of our depositors. And depositors are also the users of our services, and they also require protection of interests. Thank you very much, Galim. Very interesting topic, and you even proposed the solutions. I hope you're being heard by those who need to know this. Now, to continue the topic of accessibility, about 20% of potential business entities use loans from banks or microfinancing institutions. What is the reason for this? Galim Abizhanovich has said that we need to improve access to tax information, but I think tax information still is not very good, because there are special regimes, international. Most of them do not have good financial reporting. I'm not talking about even IFRS. And so I think we need to use the other source that Shalkar Amangosovich. Now, how to reduce credit risk of the borrowers and how to motivate their transparent activity. From the standpoint of regulation, what do you need for MFI to be the provider and catalyzer of loan supply to economy, especially for SME and agribusiness? Thank you, Elena Leonidovna. I congratulate everybody on the coming holidays. Today, Madina Yarasilovna has already mentioned that the regulation perimeter has included also pawn shops, MFIs. Their number is now more than 1,000, more than 2,000 MFIs, more than 200 lending partnerships. The growth of lending is about 30%. The sector is developing quite aggressively. I think this is happening due to the fact that starting last year, as was mentioned, the perimeter of regulation has included all the entities in this sector, all the parts of this sector. Prior to that, a part of this sector was regulated and the other part was not regulated. There were the so-called online lenders. And I think the National Bank, starting in 2019, began this initiative, and the new agency realized this concept, and now all the entities are part of the perimeter, and this creates condition for the development of the sector. And we are seeing the first initiatives that are being aired by the heads of the agency. It is to transform large microfinance institutions into banks. So when we welcome this initiative, we think that this will allow to increase the coverage of financial services, especially in rural areas. And MFI are concentrated in rural areas, and the opportunity to provide customers not only lending but other banking services is, I think, from the perspective of the customer and from the standpoint of the state, is a good advantage. Another advantages and other initiatives are being proposed by the regulator. For example, you cannot be an agent factoring up. So you can be an agent of insurance company. You can be a factoring agent, and the access to stock exchange, and a lot of MFIs are using this opportunity. The largest problem in the sector is the funding question. As different from banks, MFIs don't have resources from depositors. So MFI relies on the shareholders' funds or on operations with banks or international financial institutions. And access to entry to the stock exchange is a great opportunity. Some companies are already listed. They have already international rating, and they have high rating points, quite high, sometimes even higher than the banks, and we need to welcome this. And since we have discussed a little, I'm confused a little by the fact that the openness, that this accessibility, I see that even small companies, they don't have enough experience. They are listed on the stock exchange, and I'm a little concerned that if there is a default of one of them, this will have a ripple effect on the whole sector, affecting the sector's reputation. And there are people from the stock exchange here. I would like to draw their attention to this potential, to this possibility, but the further development of the sector. And your question on how we can make borrowers more high quality. The company that I've been working for more than 20 years, apart from the international rating procedure that we've been through for several times, we have passed the social rating. There are several companies, several microfinancing companies that do rating on the principles of customer protection. There are lots of instruments, including responsible price formation, all those that the regulator is trying to promote. And this is already present in the world, and there are even special rating companies that provide such rating. Kaiyp has AA score. There are just a few companies in the world that have this score.
The other side of it is that microfinancial organizations need to be more involved in non-financial products, so we could take more participation in training our customers, improving the financial literacy of the population. Kaiyp has developed special courses together with international consultants, and over 170 of our citizens have already taken that course, and we've trained them. And I think if other MFIs and other financial institutions were to focus on that, we would also, as a result, get more quality borrowers and customers. But in the first part, we've already heard about green funding. It's not that we declare, but we're already doing it. We've concluded several agreements with the EBRD in the field of green funding. We've signed a contract with the largest in the world European Investment Bank, also for green lending. And there are some good, interesting products there that do trigger an interest with the borrowers. And also important, and it's been mentioned many a time today, the digitization, and on the market, there are MFIs, microfinancial institutions that are not only developing but also implementing mobile apps with integrated capabilities of repayment of loans, but it also, for the customers, helps with management accounting. And I think that further digitization of this sector, along with training of the population and improving their financial literacy, will get microfinancing to be the main driver of SMEs going white and shift to a civilized mode of relations. Thank you very much, Mr. Shalkar. Now, you've talked about digitization, and today at the first plenary session, we've already talked about that, about the additional capabilities for the banking sector to go into non-banking segments and for other segments to try to join in the field of banks. Now, Mr. Aibek, after you dealt with the problem assets, did a rebranding and quite actively, I mean, not you personally, but your shareholders have journeyed into external markets. Your group within Kazakhstan is welcoming the purchase of foreign securities by customers. It's obvious that you're building your business not only in Kazakhstan, but also outside of it. And in this regard, do you not see any barriers for yourself? Maybe there's legislation that poses difficulties for you, the current legislation. And the second topic, just recently on the internet, I read that Walmart, a big network globally, is creating its fintech company. So why can't banks create a Walmart or something like that? Maybe these risks are not really there. What do you think? I mean, in terms of competition and solving and allowing competition in the market, let's allow banks to do everything, or are there risks involved here? Well, thank you very much. Now, for the first part, it is true that our group is represented on 3 markets. That is Kazakhstan as our main market, the Russian Federation, and Kyrgyzstan. And in all 3 banks, we are applying the universal banking model. We provide services for 3 main segments, which is the business, Jusan business in Kazakhstan, Jusan retail, and Jusan private banking. Now, briefly, what issues or opportunities we see as far as regulation goes. We don't see any issues. The regulator is kind of the same in Russia and Kazakhstan and Kyrgyzstan, the same principles, and they pursue the same goal to protect the rights of the consumers and to create unified rules of play for these markets, which another thing that we faced is this slight imbalance. If we're talking about Kazakhstan, an imbalance in regulating Kazakhstani players against versus foreign players. And then we're talking about the stock market. I know we're going to have a panel session for the stock market, but we do know and see how foreign investment companies come to Kazakhstan and they polish the market over premium customers, take the money, and nobody's regulating them. And a Kazakhstani broker, Kazakhstani investment company is under harsh and I would say correct regulation. It has to provide a lot of reporting, and on its business level, it is not as efficient as a foreign company would be. And so if we're talking about prospects for future development, I'd say that we are seeing how, as an international group, we are seeing the need to create unified rules of play for local players and for incoming players externally. And as far as the second part of the question goes, the ecosystems of Walmart and so forth, we do overall welcome the creation of ecosystems. We believe that ecosystems are the future, and this trend has been defined. So if before we had questions of whether there can be a niche bank or an ecosystem, what we understand in Jusan Group is that ecosystems are the future and there won't be any real other models. But still, we do also understand that then the question is, what kind of ecosystem should it be? Should it be an overarching comprehensive one or a niche one? Bank-based ecosystems or marketplace-based ecosystems, maybe like in Indonesia, based on a taxi company and delivery company. So we overall welcome the creation of ecosystems. The risks are there. The risks need to be regulated. And how to regulate them, we need to discuss that, start discussing that now. As we're seeing from Russia's experience, that conversation started not 2 years ago or 3 years ago, it started 4 years ago when they discussed the regulation of ecosystems. Then they've already discussed the regulation of working with big data, personal data. Well, we just need to get together and start actively and openly discussing how to regulate it through the capital of banks, through other mechanisms. So thank you. Thank you very much. That's absolutely the right direction. It needs to be discussed and openly. Probably we won't be able to just take best practices and plant it in Kazakhstan. We'll have to create our own. And getting back to the beginning of our discussion, why do we need all this regulation? To protect the rights of investors and consumers. And there are many new instruments coming out now. Mr. Mukhtar told us very specifically about what's being regulated, what if services the AIFC provides, but the AIFC is a regulatory sandbox in a way. In particular, you do have an opportunity for physical entities to participate in crowdfunding. A lot in the press and on the internet, there is discussions of opening of a crypto exchange and opportunities for retail investors just within $12,000 annually to buy cryptocurrency, an unsecured digital asset. So it's clear that these instruments are launched at the AIFC because you're the driver of innovation. But on the other hand, and Madina Yarasilovna talked about that today too, there are new ideas arising on the protection of the rights of investors constantly. So right now, today in the parliament, new amendments are being considered about additional protection of mortgage borrowers. And we're talking about additional limitations on confiscating residential real estate, and also additional novelties which bans the accrual of interest after 90 days. So these instruments are still in the zone of attention, and new instruments that come out, they really don't have any limitations. So Mr. Mukhtar, but just briefly, what do you think? Is there a problem that financial or concealed financial products are there for not very literate borrowers financially? And how should we limit that? By just raising financial literacy or by limiting their access to them? I'll try to be brief. In the AIFC, we do have a regulatory sandbox where we can test a fintech product, and during testing, we do limit who this service can be provided to, and we also limit the scope. And so during testing, this we believe that the consumer is well protected. But after this testing, and out of the 60 companies that are in this sandbox, 8 are already out of the sandbox and can work full-fledged. Your question is really important in terms of how to balance that access to the new products and to protect the customer. We believe that there are several ways. The first is what you mentioned, is limiting the amounts through which participation is possible, but I'd also like to remind you of the principle that we have, and it's set for organizations, that when providing a customer a service, the company should assess how much that product is in line with the capabilities or the knowledge of this customer. And Mr. Shalkar also started talking about educating customers. And I think this gives us an opportunity to integrate that and helps us mitigate that risk by educating the customer. Like, you ask a few questions to the customer, and from that you can, based on that, you understand whether the customer understands the product and the risks associated with it, and make a decision whether they want to keep working with that product, to buy it, or you make a conclusion that they don't really understand it, and so that's not quite the product that you can provide to this customer. In limiting, like making a list of products that you can sell and there are others you can't, I think that's a dead end, because customers will still find a way. If they want to invest in Bitcoin, they'll find a way to do so without us. And so they will have more risks there when they find that gray way. It's better if it's done within a okay kind of field where all the organization and the customers understand the risks involved and can make an informed choice. Thank you very much. And getting back to Mr. Smolyakov as the first speaker and the main regulator, you have listened to the opinions. You've told us about the new tools of monitoring that you use, the annual AQR, the SCREP, stress testing, all that to prevent unfair behavior. But if the risks are already there and the customer's interests have been violated, are there any other effective mechanisms for rehabilitating banks in the interest of protecting clients' money to effectively protect the interests of the customers apart from liquidation? And currently, what do you believe? Is the regulatory burden shared commensurate with the complexity of the products and the activities of the participants? And internationally, are regulators in the world managing to adapt their approaches and tools to the rapidly changing market and consumer needs? Thank you very much. That's 3 questions in one. So just briefly, now about other tools, the legislation does foresee that. We have an opportunity to carry out the procedures of regulation without having to wait for the liquidation of the financial institution. There are principles based on which, depending on the severity of the violation or the patterns, if a bank is deemed insolvent, then we can use and we can apply different tools. Bail-in also, that is when instruments of affiliated persons or subordinated instruments are converted into capital of the bank, and thus we recover its adequacy of capitalization, allowing it to cover potential losses and continue its functioning without formal liquidation. So these instruments are there. The principles that there should be a unified approach, and it's also in the legislation. So I think these tools are there. Hopefully we won't have to use them so often. And the second question has to do with are we managing with the complexity? I think in the first half of today, we've been talking about the proportionality of regulation and proportionality between segments, and also in terms of the participants within the segment. That can also be an approach to one client, because there are large financial institutions where that principle is already implemented. So proportionality is that way out to really consider the scale of the risk of financial instruments. And the last question, in terms of protecting the rights of the consumer, I was surprised that in the financial sector and the regulator, we are unanimous in our opinion. The prerogative is behavior oversight. Behavior oversight, either the institution constantly provides problem products and there are complaints, or there's a product on the market that arises, and in between different institutions, it leads to complaints about that product. And so these identifying these behavior matrices can help us improve our practice. And I agree with my AIFC colleagues that we need to educate the clients not only on the products but also about the risks. So when we, for instance, demand that consultants or an investment company, they assess the profile of the customer, their knowledge and understanding of the risk, and have an informed decision being made. Thank you very much, Mr. Oleg. And just to summarize, we all arrived at the opinion that regulation is necessary there where there are significant risks for consumers and should be comprehensive. And the protection of the rights of investors and consumers should not lead to the limitation of competition on the market and should not limit new products for the customer. Thank you very much.